You have a file on the table in front of you. It is thick. Not the kind of thick that comes from complexity, the kind that comes from time. 11 years of time. The man sitting across from you is not what you expected. He is not nervous in the way people expect someone to be nervous in this room. He is the other kind of nervous. The kind that has been living with something for so long that the nervousness has become part of the furniture. You open the file. You have done this before. Not this exact file, but this story. The story always starts the same way, not with greed, not with conspiracy, with a year that felt manageable to skip. His was 11 years ago. He was self-employed, a contractor, good work, inconsistent income, the kind of financial life that requires discipline to navigate and offers every excuse not to. April came. He did not file, not because he planned to disappear from the system, because the number he owed felt large and the consequences felt distant, and the decision to deal with it later felt like the most reasonable option available at the time. You have heard this before. Everyone in this room has heard this before. Later is always the most expensive word in the tax code. You look at the file. Year 1. No return filed. The IRS did not call him that year. The IRS does not work like that. The IRS has a system that is patient in a way that most people do not understand until they are sitting in a room like this one. The system began quietly. A substitute for return was prepared on his behalf, not by him, by the IRS using third-party data. His employer's W-2 records, his 1099s from the contractors who paid him, his bank's interest statements. The IRS built his return for him, without his deductions, without his expenses, without any of the things that would have reduced what he owed. The number the IRS arrived at was larger than the number he would have arrived at himself. It always is. A failure to file penalty was applied. 5% of the unpaid tax for each month the return was late, up to 25%. A failure to pay penalty was applied on top of that. 0.5% per month on the unpaid balance. Interest began accruing on the unpaid balance from the original due date, not from the audit date. From April of the year he did not file. He did not know any of this was happening. He was living his life, working, spending, moving apartments, changing phone numbers. The system was building a file. Year 2. No return filed. The letters began. CP503, CP504, letter 1058. Notices that arrived at an old address he had not updated. Notices that piled up in a mailbox that was no longer his. He did not receive them. Or he received some of them and placed them in a drawer with the specific intention of dealing with them when things settled down. Things did not settle down. They never do. They just become the new normal until the new normal is interrupted by something larger than a letter. Year 3. No return filed. The penalties have now reached their maximum percentage. The interest has not. Interest does not cap. Interest compounds. Every month the balance grows by the federal short-term interest rate plus 3 percentage points. Every month he does not file, the balance becomes larger than it was the month before without him making a single additional mistake. The mistake was made once. The cost of it compounds indefinitely. Year 4, year 5, he is not hiding. That is the thing you have learned in this room over many years. Most people in this chair are not hiding. They are avoiding. The difference matters. Hiding requires effort. Avoiding just requires not opening certain drawers, not updating certain addresses, not answering certain numbers. The system does not care about the distinction. The system charges the same penalties for avoiding as it does for hiding. Year 6. A revenue officer is assigned to his case. Not a letter. A person. A person whose job is to find assets, locate the taxpayer, and begin the collection process. The revenue officer finds him through his employer's payroll records. He has a job now, a real one. W-2 income. Consistent. Predictable. The kind of income that is very easy for the IRS to see. The revenue officer makes contact. He does not answer the first call. Or the second. On the third call he answers because the number looks like it might be something else. It is not something else. It is the IRS. And this is the call that changes the shape of the next several years of his life. You look at him across the table. He is in his early 40s now. He was 31 when the first year went unfiled. That is the thing about 11 years. It sounds like a long time from the outside. From the inside, it is a series of individual decisions that each felt manageable. Each one just one more month, one more quarter, one more year. Until the years are 11 and the file on the table in front of you is thick, and the man across from you is in his early 40s, and the number on the first page of the file is not the number he expected. It is never the number they expected. You turn the file so he can see the first page. The number is $247,000. That is what 11 years of penalties and interest and substitute returns and compounding has produced from an original liability that was closer to $40,000. He looks at the number. He does not speak for a moment. You have seen this before. The moment the abstract becomes concrete, the moment the drawer that was not opened becomes a number on a page in a room with no comfortable way out. You ask your first question. You ask him to walk you through the income he received in the first year. He begins to talk. Slowly at first, then more steadily as the talking becomes less frightening than the silence. This is always how it goes. The talking is always less frightening than the silence. You listen. You take notes. You ask the questions you have asked in rooms like this one more times than you can count. And the story that comes out across the table over the next 2 hours is not a story of fraud. It is not a story of hidden accounts or offshore structures or deliberate evasion. It is a story of one missed April that became 2 that became 11, of letters placed in drawers, of addresses not updated, of a number that felt impossible to face growing larger every month specifically because it was not being faced. This is the thing the system is very good at producing, not criminals, people who waited too long. By the end of the meeting, you have laid out the options, an installment agreement, an offer in compromise if he qualifies, currently not collectible status if his financial situation warrants it. He listens carefully. He asks questions that tell you he is finally ready to understand something he has been avoiding for 11 years. You answer them. You have answered them before. You will answer them again. Because the story in this file is not rare, it is one of the most common stories in this building. The IRS has 12 million non-filers in its system at any given time. 12 million people who started with one missed April. The man across from you nods slowly at the end of the meeting. He says he wishes he had just filed. You say that is what they all say. Not with cruelty. Just with the flat accuracy of someone who has sat across this table enough times to know that the statement is always true and always arrives too late to be useful. He gathers his documents. He stands. He shakes your hand. He walks out of the room. You close the file. You open the next one. It is also thick. The story inside it also started with one missed April. The year is different. Everything else is the same. The IRS does not chase you immediately. The IRS is patient. And patience, when it compounds at the federal short-term interest rate plus 3 percentage points per month, is the most expensive kind of patience there is. File your taxes. Not because the IRS is watching, because the IRS is waiting, and waiting costs more than filing ever did.